Hi, this is Adam Houston. I'm coming to you as always from the digital studios of Market Club. And we're going to be looking at three markets to trade and profit from in Q4. This is the last quarter of the year, and I think there's going to be some spectacular moves that can make your year. In the three markets we're going to be looking at, the first one's going to be the dollar index, or the dollar. Next one's going to be gold. And finally, we're going to look at the S&P 500. I believe there's three big markets, three big moves coming up. So let's start with the dollar index. And that's what we're looking at right now on the screen. And we're going all the way back to 2001. And if you just measure this out, it's kind of interesting. You look at the highs here, the highs here, the highs here. You can actually just sort of wing it in terms of cyclically what's going on. And it's the same with the amount of time that's come down to this low, the amount of time that comes down to this low. And if we project that out, we're going to see another move down into new lows, in my opinion. I think the dollar is going to have a lot of pressure. And just look where the dollar was. The dollar index, 120, right here in 2001. And here we are flirting with 77. It's just going to go down, unfortunately. I wish I could say it's unpatriotic to short the dollar. I would say this: it's more important for you to protect your money than to think of being patriotic or not patriotic. This is something that's being pushed on you as a citizen of the United States, or anybody who's a dollar holder. You have to protect yourself. So that's going to be one of the big moves we see in Q4. So Q4, the dollar down. Use our trade triangles, which are right here, to time them, but right now everything is in a status of going lower. So let's watch that, and let's go on to our next market, which is going to be gold. Okay, we're back. The next market we're looking at is gold. This is spot gold. This is a daily chart going all the way back to the same time frame as our dollar index chart. As you can see, as the dollar was going down like this, gold was in fact going up like this. So it does store value. The argument has always been, well, it's you can't eat it, you can't sleep with it, whatever, but this does store value. And the dollar went down, gold goes up. And look at what's happening here. We've talked about this before, this huge energy field, which I think we're going to go through on the upside and go much higher. We're looking for this market to go to around the $1,200 to $1,300 an ounce, even higher if things get really hot. So I want to take this off the screen. I want to scope this in because I did a video on gold just recently, and I showed you some of the important elements that we're looking at in terms of cycles. And I think just very quickly, here they are. There's the low here, the low here, the low here. We're coming into a low period now. Then I think we'll see a little bit more action, sideways action, and then I think we're going to skyrocket on the upside in gold to the end of the quarter. As you can see, our MACD indicator is starting to turn up here. This is still mixed, but wait till this comes over here, then you can be a buyer, or to follow our trade triangles, which are very much in the forefront of this market. So again, cycle low, cycle low, cycle low, we're going higher. Look for gold to make its highs probably at the end of this year, beginning of 2010. So it's another great trade for you to follow. Let's go on to our last trade, which is the S&P 500. Okay, the market we're looking at right now is the S&P 500, and you've seen us talk about this market before. There's some very interesting things going on here. One of which is, we've talked about this, the Fibonacci retracement level from the highs that we've seen in this market going all the way down to the lows, and that's going to be very, very important to see. We're very close, as I said, we're very close to this 50% retracement, which is right around these levels here. And we're going to be seeing something, I think, quite interesting in this market. I think all the stimulus money has been been spent. I think no jobs have been created, which was the object of getting the stimulus, was to create jobs. But we've seen the market beginning to look a little bit tired. And what we may do, we're in the month of October. Again, you remember back here in '07, we made the highs in October and then turn down. I think we're going to see more of a two-way market, and then eventually I think we'll see the market come down and probably make its low, ultimate low, in Q1 of 2010. I would not be surprised to see this market come down and retest these lows, even break through these lows, because if you take this market out even further, and this is where it gets to be very disturbing, if we take this market out even further, you can see we've taken out these lows, which are right around here. So this is a new low, multi-year low. This same time window, we're talking about 2010. You can see the dollar was, you had the dollar going down, you had gold going up, and now I think the next shoe to fall is going to be the S&P 500. You can see if you draw a trend line here, I'm going to do it very loosely, but we're still under this trend line. We're back into an area that's going to cause problems for the S&P 500. And maybe it's going to be unemployment going over 10%, maybe 11%, who knows. But this is a consumer-driven economy. And if people are getting put out of work for whatever reasons, and no one wants to see people put out of work, but that is not great for the economy. Also, interest rates are at record lows. They only have one way to go, and that's up in interest rates, which is not a good sign for the stock market. Again, watch this market very carefully. Use our trade triangles to look at it, and we expect the S&P 500 to be under pressure, or moving sideways and under pressure, until Q1 of 2010. Hey, this is Adam Hewson. Thanks for taking the time to watch these three markets. Remember, gold stronger till the end of the year and probably into 2010. Next market, dollar index falling to new lows. And finally, the S&P 500 is going to be under pressure. There's no other way for it. Thanks for watching. Every success in the markets, and be sure to watch these three markets in Q4.